Markets overall saw some weakness today. The S&P was down 0.28%, closing at 6735.11. We've been trading in this consolidation range between the big 6700 strike and the 6750 strike to the upside. We actually opened up above that range today around 6760 before immediately rejecting down into the 6730s. And the largest gamma exposure concentration is still at this 6700 level. And I think a lot of the reason for this consolidation is market participants appear to be pretty sticky around that 6700 level. We have noticed growing gamma exposure at the 6800 strike over the last several days, indicating an increased probability of a breakout to the upside. And so that's something that we're looking at anytime between tomorrow and the monthly OPEX next Friday. That's a potential near-term target. We continue seeing outlier volume coming in at that 6800 strike, nearly 100,000 contracts almost every single day. So there's a lot of interest building at that 6800 strike. Again, another reason why we think a probability for a breakout to the upside within the next week or so is increasing. And so far, this 6700 level has held as support a number of times over the last week or two, especially basically ever since the beginning of August, that level has been holding. And so a break of that 6700 level could see a quick pullback down to 6600. That's kind of our intermediate support level on the downside. But so far, buyers continue to step in. And in the options market, we continue seeing volume at higher strikes.
Thanks, Anthony. Even though we do see some red flags, which we'll get into today, IWM seems to be on a mission to get to 250. So I wanted to take a look at IWM. It obviously carries some implications for the other indices as well. And IWM actually has slightly negative GEX. You can see IWM has really hugged this yellow whole moving average quite closely since the August low. And more recently, just looking at the last 3 days in particular, we had that gap down. We've been kind of consolidating in a tighter range each day. Today was interesting. Even though it was a red candle, notice we have a higher low and a higher high compared to yesterday. Right now, we're holding above the 245 cluster, which is important, both with positive and negative GEX visible in large quantity. And really, we can't really look toward the 240 area or lower unless we can break and hold below 245. So I still think even with the odds of a pullback likely increasing in the near future, we still have a shot at 250 for IWM. My guess is that if that happens, that will also drag the other indices up with it as well.
Thanks, Sean. Next, let's take a look at TTD. Flat on the day, trading just above the 54 level. TTD is in the process of attempting to form a large double bottom, a multi-month support level around the 43 area. Gamma exposure has been very strong between 50 and 60 going back for the last couple of weeks now. And this is a name that we have been recently trading. Earlier this week, we locked in $1,110 profit on our October 17th TTD 50-60 call debit spreads. We were able to capture a very large move in a short amount of time. And if we just go back to the initiation of that trade, that was back on September 22nd. And at the time, we were seeing gamma exposure growing quite substantially, as I mentioned, at the 50 strike and higher. TTD forming a really nice resistance on this particular day was approaching that big breakout level. At the time was trading at 46.26. It was already up 4% on the day. And so this was an expectation that a breakout was imminent. When we looked at the options market volume at that 50 strike, we saw huge volume on that particular day, over 20,000 contracts traded at that 50 strike. So everything was pointing to a big breakout looming towards those large gamma exposure concentrations at higher strikes. So fast forward to today, we are approaching the 50-day EMA, and we're seeing a little bit of consolidation or resistance around that level. The largest GEX is currently sitting at 55. There continues to be pretty decent volume coming in at higher strikes, and so you can see that skew building to the upside. So if this is a larger upside move forming, we could see further movement up to the 60 level or even higher. And so that's something we're going to be looking for a potential re-entry in TTD. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord. I'll put links in the description below to both of those so you guys can check it out.
Thanks, Anthony. TTD has definitely been good to us this year. Let's take a look at the VIX. I find the 2-hour and 4-hour charts on the VIX to be helpful in terms of the Keltner channels, which tend to be pretty good guides for where reversals can occur on the VIX. And today we saw the VIX close below the cluster of indicators I have on the chart, the whole moving average 9-period SMA, the 15 EMA, and the middle Keltner channel. So this is a short-term bearish sign for volatility, potentially opening the door for a trip down to the 15.5 or 16 area, if not a little lower. Now, this would appear to be a short-term break of this uptrend that we've seen, but this would also potentially indicate an area where we could see a reversal. Let's take a look at the daily chart now. We have this series of higher lows ever since middle of September. And today, you'll notice on the daily chart, we also rejected the whole moving average. So the VIX on multiple time frames giving us a potential signal that the VIX could drop further, the market could go up more. We have seen the VIX and the market rising together over this time frame. What you'll find is that these periods of the VIX rising over a period of time tend to end in spikes. So to summarize, we're looking for a move down in the VIX, probably short-lived, with the potential to reverse from that point and then see a spike that this increasing VIX has potentially been building up to.
Thanks, Sean. Next, let's take a look at Amazon. Amazon had a nice move today, up 1.12%, despite the overall markets being down, closing at 227.74. And this is a name that, Sean, you actually had brought up earlier in the week as a potential breakout candidate. Just recently, we've been looking at this consolidation range between the 217 level and the 223 level. And just yesterday, at the end of the day, Amazon was attempting to break out. And so we actually took a long position in this as a tactical trade. We're still in the position. We bought the 225 230 call debit spreads expiring tomorrow. You can see gamma exposure is all concentrated at that 230 strike. And in fact, if we take a look at our weekly filter, this is just showing contracts that expire this week. So tomorrow's expiration for Amazon, all the concentration is at this 227.5 strike with a growing concentration at that 230 strike. And that's been the case for the last several days. And so as Amazon has been consolidating, all this GEX here at 225 and above has remained strong. And so that prompted us to take a long position. We're in the money on those 225 calls, and we think this potentially has some room up to 230. So we'll take a look at this first thing in the morning and see where we're at. Hopefully we'll be able to lock in some profits. But besides the short-term play, long-term also looks like a potential opportunity for Amazon. We're seeing price closing above the 50-day EMA just the last couple of trading sessions. 50-day EMA sitting at 224.59. And as we look up the options chain, we are seeing growing gamma exposure above that big 230 strike. 240 is growing pretty substantially, and basically the GEX is skewed up as high as 260. So we're seeing quite a bit of volume coming in as well at some of these higher strikes. So in general, I think Amazon has a pretty good opportunity to at least get back up into this 235 to 240 range in the coming weeks.
Thanks, Anthony. Let's take a very quick look at eBay. eBay has seen increasing GEX on average since September 12. You can see it was deeply negative. Now we're actually in positive territory. And I wanted to point out it has a very clean looking GEX picture. That doesn't mean that it has better odds than any of the other tickers that we've looked at today, but it is fairly easy to explain what we're seeing. eBay is currently at 90.13. That's holding right at this important GEX cluster right at 90. There's positive and negative GEX there. And you can see, since we have positive total GEX, we're going to look higher to see what targets might come into play. And the 100 strike really stands out. That matches with this upper Keltner channel. It's also our upper dealer cluster zone, where we would expect eBay may reverse from that area. But given that we're at 90, that also represents a target that's over 10% away, which would be a nice move for eBay. We can flip over to our 3D graph, which shows where some individual GEX clusters are actually set as far as the expiration dates. And you can see 100 is present on October 17. It's also present November 21. This doesn't give us an exact time frame in which we would expect eBay to reach 100, but given the GEX clusters that are both in October and November, if I'm looking to take a position in eBay, which I don't have one right now, I'm probably going to look toward the November to December timeframe to make sure that I have enough time to get closer to where this GEX cluster at 100 is.
And guys, you can get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies by heading over to geeksoffinance.com. Members also get access to our community Discord. You can track our trades in real time as we manage our options portfolio, and there's a ton of great traders in there sharing their own trade setups and strategies as well. It's a great resource, something you definitely don't want to miss. I'll put links in the description below to all of that so you guys can check it out. Thanks so much everybody for watching, and we'll see you guys in the next video.